Hey everyone, welcome back to Corporate Decoder. Today we are diving into Shell's latest 20F report, the Financial Annual Report. This one is a little spicy because their auditor initially bailed. Talk about a plot twist, we will check the details, so stay tuned. First up, you may ask, what is the story here? We're looking at Shell's year, a massive document that has a lot to say about the company's financial health and where it is headed in the future. Also, how it navigates in a world that wants it to change. Right before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Now, this isn't just any 20F, it's an amended one, which means they had to refile to fix something. The big news, Ernst & Young is there. Independent auditor initially said, whoops, we're not independent enough to audit Shell, it's a big problem. So I had to retract their audit report on Shell's financials. To fix this, they assigned a new partner to review everything, and thankfully numbers didn't change, and here's the refiled report. First, let's take a look at the securities. They have a lot of different notes and shares listed on the New York Stock Exchange. We are talking shares with a nominal value of about 0.7 each, plus a whole bunch of guaranteed notes due in various years. 2026, 2026, 2028, and even stretching all the way out to 2051. Next, let's talk shares. At the end of 2024, Shell had about 1,376 ordinary shares, which implies a lot of people owning a share of the pie. Now, this is a key point because Shell is saying, hold on, everything balances, the numbers are solid, and our internal controls are working just fine, but it's been kind of a paperwork dance to get here. The new independent audit firm said nothing had to be changed and the controls were good and agreed with the numbers from the first group. Digging into the financials, Ernst & Young, after their second look, declared that Shell's financial statements are presented fairly and accurately. That's what you want to hear after a refiling of a financial report. A also mentions they check Shell's internal controls and everything seems to be in order. Now let's talk about this massive balance of oil and gas reserves and then get to some numbers. One big issue that I kept an eye on was how Shell estimates its oil and gas reserves. If Shell messes up these estimations, it throws off depreciation and depletion numbers, which messes everything up, including how profitable they look. A said, okay, we evaluated the process that they used outside experts and made damn sure everything followed SEC regulations as an example of what I did to address this important audit matter. A also focused on impairments, that is, if their equipment or projects lose value, like say they are impacted by a shift in market or a strategic choice, because these can suddenly drop asset value and earnings. EY took a very close look. They also dove deep into what future assumptions should be used. A made sure to check the carbon prices were in there as well. In response to those concerns, they brought in climate experts, checked with other oil companies if they see the same with their assets, and they made sure Shell had plans for when things go south. Next up is gas and power. These contracts are where Shell buys and sells energy commodities all over the place. It's like a dance in itself, figuring out how much the contracts are worth and when to book the profits, especially when the markets are acting crazy. To do so, EY audited the contracts, involved market specialists to make sure they're on point, confirmed data from outside sources, and created a valuation model, basically a financial crystal ball, but to be sure it wasn't a scam one. Alright, enough of the accounting details, and now let's discuss the financials themselves. Revenue is down from 381 billion to 284 billion. For comparison, looking at Shell's most recent competitors, the worst performer had its revenue up 20%, and the best performer had it up 40%. This seems bad as Shell has lost roughly 1 in 5 customers. Depreciation is down from 31 billion, and they mentioned some write-offs and gains associated in Note 9, so we aren't in any danger there. Tax also decreased dramatically in both amount and percent, and so net income is around half. All this to say earnings per share are down, although not as dramatic. Again, they are halved. Looking at the balance sheet, cash is roughly on par with Dec 31, 2023. There's also a reduction in their current assets. Here's a point to watch out for. Liabilities from assets for sale are up nearly 20 times. That are not always beneficial. Then there is financing. We can see that long-term debt has decreased. There is more net cash, but the debt in the short term increased as a result. This debt management looks okay. Okay, now let's talk climate change because it runs all throughout this report. Shell needs experts to carefully look at how much oil and gas they expect to get from the ground and what it is worth. Also, whether carbon prices change. we can understand exactly why and how this is important. And where all of these risks are is by looking at the individual charts that they provide as well. They list 3 different price lines that describe how prices might go based on outside forces. They also plan on paying for carbon emissions, where it increases yearly, reaching $5 billion by 2055. This is big brain to plan for. And let's stop for a second and ask, what if things turn out to be worse than even these calculations? They do mention they may have to take carbon intensity down and abandon certain fields or drilling if they can't get it done. Finally, there is pollution and what is planned to keep things pollution-free-ish. It consists on buying biofuels or just paying extra. They say how it makes the world a bit better and how they help meet the world goals for lower pollution. Finally, checking that we are still sane and seeing the number of shares are in fact accounted for. Finally, before we get into the closing thoughts, let's go over lawsuits. Turns out Shell has a fair share of legal squabbles, from pesticide cases to climate change lawsuits, especially with the Dutch courts breathing down their necks. One big lawsuit from Netherlands-based Milieudefensie that wanted Shell to commit to CO2 targets was initially lost, then won, to eventually end up in the Hague Court for final judgment. It is a hot mess that has very important implications, more to keep track of. Dexcrodes,